Live from Bloomberg's World Headquarters in New York City, I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Bitcoin under pressure as it comes off its worst week since November because Treasury yields are sitting around multi-year highs, posing a challenge to many risk assets.
So we'll have more on the price action. Plus, we speak with EY Global blockchain leader Paul Brody about the potential approval for Ether futures ETFs.
And Coinbase takes a stake in Circle and dissolves the group governing the stablecoin USDC. We'll discuss what that means for the regulation picture.
All right, so all of that is ahead, but first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is we are seeing continued pressure on Bitcoin. Matt, it was just a week ago today. I was standing here doing this show talking about how we'd been hanging out at $29,000-ish for weeks on end, and then that all changed over the course of the last week. We actually had a break below $26,000 earlier in the session. We're basically hovering right there at that level right now with Bitcoin down about 0.3%. It's even worse for some of the other digital tokens. Ether down by about 1.4%, and Polygon, one of the big underperformers today, off by around 4.5%. What is interesting, Matt, is to see Coinbase kind of shirking off the broader downward pressure in digital assets and related stocks. That has everything to do with that stake in Circle you were just mentioning. We have more on that coming up later on in the show, but Coinbase at the moment up by about 0.8%.
All right, if there's a silver lining for those who are long Bitcoin in terms of the drop, it's that it's fallen so far that one technical market measure shows that it's oversold. This is the RSI, the Relative Strength Index. And right now you can see that we're far oversold on Bitcoin as it holds right now under $26,000. One of the reasons for the sell-off may have been the jump in Treasury yields. We saw the U.S. 10-year yield rise to 4.34, the highest level it's been since 2007. And if treasuries are yielding that much, it offers a lot more competition to assets like Bitcoin, which don't yield anything, Kailey.
All right, Matt, let's get more on the charts and the price action now. Joining us is Noelle Acheson. She is the author of the newsletter Crypto is Macro Now and is former head of market insights at Genesis. Noelle, thank you very much for joining us today. Can we just talk about what happened exactly in the last week? Where should we cast blame on the action we have seen?
Very, very good question, Katie. And, we're all asking ourselves that. One thing, I haven't done the statistical analysis on this yet. I really should. But I can tell you anecdotally that every time we see crypto commentators start to jokingly call Bitcoin a stable coin, we get a further leg down. I've seen this many times. And sure enough, the stability has been unnerving. We were waiting for a move. We were hoping volatility would come back. We were just kind of hoping it would be in a different direction. The fact that there are some strong tailwinds building under the Bitcoin asset, Ethereum, all the others, the strong tailwinds building and still very little movement, that is a fascinating story that largely has to do with the lack of liquidity and the lack of volatility.
Okay, so to the point on the lack of volatility, now that we have seen somewhat of a spike in it, should we expect it to stick around, or are we going to revert back to what seems to be the new normal in that regard?
I wish I knew, to be honest. And here's the interesting story behind that. First of all, a reminder that volatility in crypto, it's a feature, not a bug. And the lack of volatility, rather than make people feel more confident in coming into the market, it's actually keeping large investors on the sidelines because market makers and other liquidity providers, such as high-frequency traders, they need volatility for it to be worth their while. Obviously, there is some activity going on there, but not nearly as much as there used to be. And with low liquidity, because of the low volatility, then there's greater risk for large investors, both on slippage and exit liquidity, with greater risk, especially given so much uncertainty on the macro environment. They're still hesitant to step in. Liquidity needs liquidity. What will it take to change that? Well, there are some signs of liquidity, some signs of volatility coming back in. It's very much a case of you go first. No, you go first. No, I insist after you. But, eventually some brave investor is going to go first, and then others are going to see the uptick in activity, which maybe we've seen, maybe not. They're going to see the uptick in activity, and maybe they'll step in as well. And then liquidity, one day, someday, eventually, it will be back, and then things will move fast. The uptick that we've seen with this last leg down, maybe it's too soon to say we're back, but it could be the start of something. The tailwinds are not inconsiderable.
I want to get your take on use cases, and we're going to talk about that with our next guest surrounding Ether. But in terms of Bitcoin, you often hear it's digital gold, in which case volatility would be more of a bug than a feature, wouldn't it?
Depends on your time frame. Longer term holders, when you're talking about digital gold, I mean, the traders, sure, volatility, it gives them trading profits, right? But for longer term holders, they don't really care. It's the longer term perspective. And while we can debunk the fact that Bitcoin has been an inflation hedge in the US, cast your eyes outside. That's all we really need to do. Look at Argentina, 114% inflation. Bitcoin in Argentinian peso terms has tripled year to date. Turkey, they're expecting their already mid-level double-digit inflation to increase further. Bitcoin in Turkish lira terms up over 120% year to date. So again, investors in areas outside of the United States, outside of Europe, do see Bitcoin as a hedge. That's the use case that I think is being very undercovered, underappreciated at the moment.
Noelle, what do you think about the correlation to stocks, or the lack thereof right now? You know, for a long time, every uptick in the NASDAQ 100 was coupled with an uptick in Bitcoin and vice versa. And we've now seen that correlation break down. What does it mean?
Correlation is a wonderful narrative device, Matt. I personally very much enjoy talking about it, but we have to remember it's just a narrative device. What's more, it's a backward-looking narrative device. The fact that Bitcoin has been very uncorrelated to stocks recently, lowest correlation in a very long time, is because of its lack of activity recently, while stocks have been pretty active. That's the only reason. Will this continue going forward? I don't think it will. I think we're going to see correlations start to take up, and they can move fast. They look slower on the charts because correlation is always smoothed over whatever time frame we happen to be applying to the calculations. But you know that when there's a crisis, when there's panic, when there's blood in the water, correlations head to one. And I believe we have a stock market correction coming. We'll see some correlations tick up there. Longer term, the correlations are breaking down because of the use cases that we just touched on, Matt, because of others that will be emerging. However, it's not really something we can use to predict the performance going forward. And I have heard some analysts say this means investors can start to put it in their portfolio again. And my answer to that is not so fast. The correlation hasn't gone away. It's resting.
I want to also ask about the Ether Bitcoin ratio. As I said, we're going to talk with Paul Brody in a moment about his new book and use cases for Ether. And it started to move a little bit in the last couple of sessions. What do you make of Ether versus, you know, the OG crypto token?
I do believe we're starting to see signs of ETH waking up. And frankly, Matt, about time. It's been very asleep for most of the summer for several reasons. One, the regulatory uncertainty. DeFi has been very lackluster, partly because of some exploits, very high-profile exploits as weakened confidence, partly because many tokens that run on Ethereum have been declared securities. That does impact Ethereum activity, which impacts the price of Ether. However, also the macro attention that you mentioned that has been directed at Bitcoin, but that is starting to change. We're seeing more investors start to finally take a look at ETH because of the likelihood of an ETH futures-based ETF sometime this year, because of the potential regulatory clarity that will eventually happen, even in the United States. And ETH stands to gain much more from that than does Bitcoin. And also, Matt, this is a very overlooked feature of ETH. It's reflexive. It's leveraged on itself. When the price goes up, there are more Ethereum transactions because there's more interest in ETH. And with more Ethereum transactions, more transaction fees. On Ethereum, transaction fees paid in ETH, that ETH is burned, which reduces the net supply, which has been pretty low, slightly negative anyway. So lower to tending negative new supply. All things being equal, will increase the price, which will increase more activity, which will increase more transactions, more fees, more burns, and so on. It's reflective, which is why I think that when we start to see ETH move, again, it'll be fast.
All right, Noelle, thanks so much for joining us. Noelle Acheson there talking to us about the crypto world. Coming up, as I've been saying, we're going to talk to EY's head of blockchain, Paul Brody, about crypto ETFs, about the ETH futures that Noelle was mentioning, and of course, about his new book, Ethereum for Business, a plain English guide to the use cases that generate returns from asset management to payments to supply chains.
And Coinbase shares are rising after taking a stake in stablecoin issuer Circle. We'll have more on that coming up.
Plus, to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
We see one position from the SCC, which is regulation by enforcement. Nowhere has it really been established what assets are considered securities and which are not. And even in the two Ripple rulings we've seen, which were not even a month apart, we have dramatically different interpretations. The only way that we get clarity is not through these piecemeal regulation by enforcement steps we've seen, but through clear regulatory guidance. And that, in my view, at this stage can only come from Congress.
That was Meltem Demirors of CoinShares speaking to Bloomberg a few weeks ago on this show after federal judges for Ripple and Terra cases split on whether those tokens are securities. And now the SEC has asked a federal judge for permission to appeal the Ripple ruling. Bloomberg's Sonali Basak joins us now for more. Sonali.
Yes, it's the latest in the saga between the SEC. Remember, back in July, District Judge Annalisa Torres had ruled that the XRP token of Ripple Labs is not a security when it's sold to the general public, and the ruling was a preliminary motion and not a judgment. So the SEC is now seeking permission for its immediate appeal, saying that the ultimate answer to these questions could affect a number of pending cases involving crypto assets. In the latest twist between the two industries here, you do have a very significant amount of pushback here between the two parties. Now, we do have this appeal from the SEC. We also have the fact here that the early response of the XRP token has been a huge rebound, but those gains have since waned since then, and it's becoming clear that that ruling may not have been the industry clarity that has been needed to move forward. Now, remember, as you were just talking about, there's a separate case between the SEC and Terraform Labs, where a separate judge, Judge Rakoff, said the Terra USD might be a security when it's sold to retail investors, and that is just one of many suits between the SEC and the different industry giants, including the largest crypto exchange, Coinbase, which is fighting the SEC on its current stance while also working closely with the watchdog on separate matters in the crypto world, including the advancements of ETFs tied to Bitcoin. Now, for its own right, Ripple is fighting the SEC's appeal. The company's executives, in their own legal response with the judge, say the next step should be a trial, which they say should happen expeditiously and is in the interest of the public. Yet they say that the SEC's appeal should be denied.
All right, Sonali, thanks very much. Sonali Basak bringing us the details of that case that's ongoing. Let's bring in Paul Brody, EY's global blockchain leader, to talk to him about Ripple as well as Ethereum and all things crypto. Paul, I want to first get your take on the SEC case, maybe not as a judge, but just as someone who watches crypto. How important was it that Ripple won at least part of that case?
So I think it was actually pretty important because any step forward towards clarity is a positive step. And I think if you look at the draft legislation that's coming from Congress, it's very, very reasonable. And so all of these things, I hope, are converging towards pressure towards we should have more clarity of rules. And I think what Meltem said in your introduction was fantastic. She's right on target. Clarity is good for business. And hopefully between the legal decisions and the pending legislation, we're getting there in one small step at a time.
Okay, so as we talk about the pending decisions around what is and is not a security, also all waiting with bated breath each and every day to see if a spot ETF approval actually may come, or Grayscale may actually have its ruling come down in the D.C. Circuit Court. Didn't happen today. We'll see if it happens on Friday. So we'll all wait for that. In regard to ETH futures, though, and that potential ETF, that one seems like it maybe is more likely. What real difference would that make, Paul?
So I think it would make an enormous difference because we're really starting, and your prior guest was amazing on this topic, we're really starting to see the difference between Bitcoin, which is a kind of digital gold, and people want to see it as potentially an inflation hedge or a global asset, versus Ethereum, which is becoming a global computing infrastructure. And so by having ETFs for the two separate ones, and specifically having Ethereum ETFs, you can start to sort of take a stake in the Ethereum ecosystem, in the cash flow of transactions, in the value of the overall asset infrastructure that's being built there. And for people to see these two properly as separate, I think it's really important for the development of the overall marketplace.
Okay, so on the subject of Ethereum, you are a somewhat expert on the subject. You actually just wrote a book that was released earlier this summer, Ethereum for Business. It's called A Plain English Guide to the use cases that generate returns from asset management to payments to supply chains. Paul, how should businesses be thinking about using this technology?
So we have a very simple saying at EY, which is that we believe blockchains are going to be the glue that tie business ecosystems together. And even though everyone tends to focus on finance and DeFi and SEC rulings, in fact, Ethereum is an incredible infrastructure for tokenizing assets, tracking supply chains. If we look at the kind of things that I talk about in the book and that we're doing at EY, they are tokenizing carbon offsets, tokenizing carbon traceability, tracking pharmaceuticals, managing procurement agreements, right? There's a tremendous amount of operational business stuff, none of which is finance related, but is essential for how companies interact with each other. And Ethereum provides a neutral, decentralized infrastructure in which enterprises can transact with each other on level, equal terms.
On the subject of things being level, is this a zero-sum game, Paul? Are we going to head into a world where one chain actually is dominant, Ethereum perhaps?
So I do believe that. I think if you look historically at the world of computing infrastructure, we like standards, right? Basically, a single operating system represents 90% of all PCs. Two operating systems represent more than 95% of all phones. We like standards. Standards scale really well. So I think we are headed for a global infrastructure where Ethereum is a global base layer standard for digital business transactions in the same way that TCP/IP is a global network standard, and that others over time will gradually wither away. Just like 20 or 30 years ago, we used to have an alphabet soup of different networking standards, and now we just have TCP/IP.
That reminds me that I love the metric system, Paul, and we're kind of nowhere there in the U.S. Are we going to face a similar disadvantage when it comes to the global blockchain? I mean, is the U.S. regulating itself out of competition here, or not regulating itself into competition?
I worry that there is some risk of that happening. I just actually got back from 4 weeks in Asia, and it's very clear Japan, Hong Kong, Singapore, and additionally Europe and the Middle East, these are all places that are moving really forward. If we look at kind of our volume of work and deals, we're up in every sector and we're up in every geography, but the places that are growing the fastest by far in terms of our blockchain and core crypto work are Europe in preparation for the MiCA assets law, and Hong Kong, which is growing rapidly as China tries to reopen, and then obviously Dubai in the Middle East, where the regulatory environment is maturing very quickly. So the U.S. is growing again, and that part is good. And I've been telling all the people on our team, summer is coming, but we are definitely lagging compared to other regions.
Summer is coming.
Here in D.C., I have to say I'm really eager for summer to be over, but that's just because I've been drowning in humidity for weeks now. Paul Brody, thank you very much for joining us. He is EY's global blockchain leader and author of Ethereum for Business. Now, coming up, we're going to have more on the story that we promised you we would have more of, Coinbase taking a stake in Circle. We'll have the details next. This is Bloomberg. This is Bloomberg Crypto. I'm Kailey Leinz in Washington with Matt Miller in New York. Well, Coinbase has taken a stake in stablecoin issuer Circle, citing, quote, growing regulatory clarity for stablecoins in the U.S. This comes as competition among stablecoins is increasing, even as the overall market value of the sector is shrinking. Let's bring in Bloomberg's Olga Karif for more. She is joining us from the West Coast. So, Olga, what do we need to know about the terms of this agreement? I don't think they were fully disclosed, but what do we know?
So what we know is that the two companies were previously part of the Centra consortium. Now they are essentially getting rid of it. And Coinbase is going to take a 50% share of all interest income that is earned off of USDC. And it's a little bit of a change versus the prior agreement. Of course, the details of that aren't known, but many analysts estimate that Coinbase took a 40% share of interest revenue. So it's a little bit of a benefit for Coinbase. Plus, if Circle at some point decides to go public, which it has ambitions to do that, then as an equity owner, Coinbase could benefit as well.
What do we know, Olga, about the competition in the space, specifically between Circle and Tether? And is the overall market really looking weak?
Absolutely, it is, Matt. And essentially, what's happened this year is that USDC's market share has shrunk and Tether's has increased. So if you look at market cap, Tether's has increased, USDC's declined. Part of it was due to the banking crisis earlier this year. In March, Circle had some deposits trapped in Silicon Valley Bank, and it very quickly got the money back, but the concerns have lingered, and so the market cap of USDC is quite a bit down, while Tether has actually increased its market cap.
Olga, just quickly, we only have about a minute left, but it strikes me they cited growing regulatory clarity as being a reason why this move is being made. I understand that House Financial Services did pass a stablecoin bill, but that hasn't actually become law yet. How much real clarity do we still have yet to see?
Absolutely. So the company definitely said that, but I think we are still ways away from real regulatory clarity on the stablecoin issue. So, I'm not sure if maybe some of the motives for this reshuffle were different, but this is at least what the companies are saying publicly.
Olga, great to have you with us. Thanks so much for filling us in on this important story. Olga Karif there talking to us about Coinbase taking a stake in Circle. Coming up next week, we are going to talk to Clara Medeli from Kaiko. She's going to talk to us about the data involved in crypto and how we can look at that to analyze just exactly what's happening. For Kailey Leinz, I'm Matt Miller. This is Bloomberg.